Hey guys, Doug the retirement guy here. Got a nice little new update. QQY. Let's take a look at what we got with QQY. Hey guys, Doug the retirement guy here. 53% dividend yield in a retirement account. Is that not a game changer? Well, that's what's being advertised and promoted by QQY. Let's take a look, see if this is going to fit into our portfolio. QQQY. It's a NASDAQ 100 enhanced options and zero DTE income ETF. Now, that sounds like a mouthful, so let's get into this a little bit more. What they do is they're working with the NASDAQ 100, the top 100 stocks are in the market. They are selling zero DTE incomes, a great strategy, which is basically 1 week short put options. And they're also working with some treasury investments for cash and returns on that. The option exposure is only 20% of the total fund, while 80% of it is into cash and treasury. The idea is to create a strong weekly payout of a nice dividend to give you some strong income options to it. Updating this as much as we could on 122, they posted a distribution rate of 38.8% on a weekly distribution and a 30-day SEC yield at 3.22%. So this is a little bit down from the 53% that was originally reported to us, but you can see it's starting to find its own magical way. Even at 38%, we'd be ecstatic of getting those numbers. Let's take a look at the holdings. And their holdings basically are treasury notes and bonds, treasury bills, $9 million in cash. They got some treasury notes, and then they also doing some government obligation funds. So they got a lot of money tied into different areas, and then of course they got their options at the bottom. Why QQY? Well, the answer to that is simple. Everybody wants the big returns. And I use their numbers now, a 38.8% return and a 3.22% 30-day SEC yield. Well, at 38%, of course, that's an extremely high number. Now, that is done over a specific period of time, and it both includes the dividends, interest, and any capital gains. When you see something as high as 38%, you always got to say there's got to be a lot of risk dialed into this. And this is something that you have to evaluate, and you have to be prepared for some very potential changes in the fund, ups, downs, sideways, every which way. A 3.22% 30-day yield says you got a good steady flow of cash income coming to you. The second thing that you always love, and I love this one to no end, is offers weekly dividend payouts. What I love about this is you get fast access. I think you've heard me say this before. It's like getting a paycheck every Friday. You can take that money, reinvest it, or you can get the money for a regular cash flow. And if you're in retirement like I am, you're going to want that regular cash flow to pay your bills and so on. So if you're going to live off this 38% dividend, more power to you. You get it on a weekly basis. It's like having a paycheck. Let's take a look at the return so far of QQY. And we look at that 1 month strategy, and it's at negative 3.39%. 3 months is at negative 0.87. 6 months, negative 1.36. Year to date, though, they're at 8.12%. And since inception, they're at 16.44. So it looks like they started the first half of the year very strong. And now in the past 6 months, they're starting to lose their hold. That could be because they didn't start paying weekly payouts till October. I don't know if that's an issue or not, but these 1 month, 3 months, 6 months are warning flags to me saying do a little more research. So the return on the investment of QQQY, we put this into our spreadsheet again and said, let's invest $10,000 into it on the day that they started the weekly dividend payouts. So on 10/10, we took $10,000, invested it. We bought 290 shares. That week it paid 35 cents dividend. So things looked up and up. Since then, you can watch the value of the stock has gone down, 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 down. We basically, so far, the value of our stock, or our NAV, has dropped $1,267 or 12.7%. This is huge to me. Their dividends are very good for great income, because if you seriously take a look at this, 22 cents is the lowest and about 35 cents is the highest. So over that period of time, we would have generated $1,194 in income. The problem is that 12% loss of our initial investment. If you take all of that income, throw it back in there, you're still at a negative 2% or $171. So your income is not even covering the money lost from the NAV or your total initial investment. So the QQQY summary, let's take a look at this. The stock return, the return of the stock right now is negative 12.7%. So this thing really failed the 53% that originally reported, even failing that 38% that they're talking about from 122. So we give this one a huge thumbs down. Now, when we get into the dividend return, and I want people to understand, this is where people get excited about, but they don't look deep into the forest to really see what's the true answer of all this. We have received an 11.94% return on our investment, which is a regular cash flow of $79 a week, or a 41% dividend return, which is not bad. If we could get the 41% and the stock stayed neutral, God, we'd be heroes. But when we see a 12% loss plus making 41, do your simple math. Okay, you're in a 20% possible over the long haul. You'd be lucky to break even on this. So for dividend, we have to give it a thumbs up because of the 41% return. But I think we're really going to show this here. Stock total return. The total return has lost 2%, including dividends. So since October, it's gone in the ditch. Will it recover? I don't know. But right now, again, this is too risky of a stock. So I have to give this thing a thumbs down. So is QQQY good for your retirement account? Well, my answer, has to be a positive no. There's no way at all you want this in your account as of this point in time. The NAV burn is way too high for an entire retirement account. You want a stock that you have two options, it's laying flat, or realistically, you want a stock that is going to grow with some kind of a return. Now, you're also looking at this and saying, whoa, what about the 41% dividend payout? That is great money. But again, all you're doing is trading your dollars for that return, because your value is going to drop down and you're going to have nothing left when you're all done. So unless this stock makes a major change and starts showing that it can go flat to increasing its value, I would not have this in a retirement account in any way, shape, or form. Tell me what you think in the comments. If you like the information we're giving you, give us a thumbs up. Hit that subscribe button. Don't miss any of our retirement questions and our retirement videos. But hopefully this helps you out. We will review QQY again, probably in about 6 months, to see if they've recovered, and maybe it is safe to be in there. But again, be safe with your money. Stay out of QQY. Hey guys, Doug the Retirement Guy here. Got a nice little new update. QQY. Let's take a look at what we got with QQY.